Good morning, everybody. Thank you for joining the Small Business Bootcamp. We will get started here momentarily. Everybody, thank you for joining the Arizona Commerce Authority Small Business Bootcamp and Resource Collective for this Thursday, June 3rd. I'm Robert Theobald, Small Business Ombudsman and Vice President of Small Business Services here at the Arizona Commerce Authority. If you're new to the bootcamp, so we like to start by first thanking all of our community partners that help provide the expertise and the content of our bootcamp sessions. We could not do all these sessions without them, and we appreciate their help and their time and effort to participate. So the Small Business Bootcamp and Resource Collective was designed to help prepare small businesses work through the COVID crisis and return stronger than ever. It is a statewide initiative supported by our community partners. And not only is it a boot camp, but it is a resource collective and a content library. So as we talk about the Small Business Bootcamp website, all of you went to this website to register for today's session. And on that website, you have the current session and the upcoming sessions, as well as the link to the resource collective. And then at the bottom of the webpage, you have the archive. And the archive is a great tool, a great resource for everybody to take advantage of, because over the last 55 weeks that we've done the Small Business Bootcamp, we've recorded nearly all of the sessions. And the recordings of those sessions and the slide decks are in the archive, and it creates a massive content library of over 140 different sessions from our experts from Arizona and that have shared on the bootcamp. And so you can go back at no cost and watch those anytime you want, review the information. If there's one that you watched and you want to review it, you can go back and do that. If there's one you missed, you can go back and watch it and get that great information that's available to you. Additionally, as I mentioned, the Resource Collective, excuse me. The Resource Collective is a website that we set up to house the guides and tools and resources that our community partners have also provided to help support small businesses. This is just a sample list of some of the items that you'll find on the Resource Collective. And you can see it covers a number of different industries and types of businesses. And this, again, this is just a sample list. We've got a lot of great information available on there. Additionally, the Arizona Commerce Authority has a COVID-19 Arizona Business Resources website. And on this website, you can find additional business guidance. You can find the financial resources that are available at the state, local, state, and federal levels with grants and lending programs. And we constantly update that as new information comes available. Additionally, the Arizona Commerce Authority has a number of different programs to help support small businesses. Our small business services can help you work with the SBA, work with the small business development centers, work with SCORE or the other no-cost business counseling programs that are available throughout the state. We can also help guide you to local banking contacts if you're looking for funding or loans, microloans. Our workforce development team can help employers are looking to hire employees with their hiring needs and with some of the programs that they have. They also have some training programs that can help employers that are looking to train and upskill their employees. And then for the manufacturers throughout the state, our Arizona MEP, Manufacturing Extension Partnership, is a great program to help work with manufacturers throughout all their needs through one-on-one counseling, coaching, and training classes that they offer. Additionally, we have our small business checklist. At this time, many people are looking to start a small business or to restart a small business or to grow a different product line. And the small business checklist is an online interactive resource to help entrepreneurs understand the licensing, registration, and compliance needs at the local, state, and federal levels. Then the last website I want to mention and talk about is the state's COVID-19 information and resource page, ArizonaTogether.org. With that, we got a couple real quick updates. The SBA has made some changes to the EIDL, the Economic Injury Disaster Loan Advance Program. You can find information about it at that link. This link will be posted in the chat, so you don't have to try to write it down real quick. Also, the PPP program closed on May 31st. If you had your application into the SBA, your bank did, by the 31st. It is still being processed, but any applications that were not into the SBA by that date would not be in. But with that, just looking at the PPP program for 2021, I'm not looking at all the lending, the funds that Arizona received in 2020, but just 2021, Arizona received 89,715 loans for almost $4 billion. So it's provided great economic impact for the state, helping those 89,000 businesses bring some funding to help support their business. Now, I want to look at some of the upcoming sessions. Of course, today's session is financial forecasting and cash flow projections. We're really excited about it with our team from Central Arizona College, Northland Pioneer College, and Coconino Community College, SBDCs. And next week, we have a presentation by Joe Corella from the University of Arizona. He's the Assistant Dean of Executive Education. We're excited to have him talk about managing teams in a post-pandemic environment. And then on next Thursday, we have banking and financial ratios for small business loans, again, provided by our expert team from the Central Arizona, Northland Pioneer College, and Coconino Community College, SBDCs. So with that, we're going to go ahead and turn the time over to today's presenters. We've got Gina and Cindy, both from the Coconino Community College, SBDC. We also have Rich and Katie with us for any questions that may come up. But Gina and Cindy, the time is yours. I'm going to stop sharing my screen and turn it over to you.
Thank you. Okay, I'm going to go ahead and get started.
While you're pulling that up, folks, if you have questions, post them in the Q&A box at the bottom of your screen, and we will use the chat for different chat items. But again, if you have questions, utilize the Q&A box at the bottom of your screen.
All right. Welcome and thank you for taking time out of your day to attend the cash flow and forecasting part of the financial workshop series. As mentioned, my name is Cindy Scott and I am a business analyst for the Coconino Small Business Development Center. In this part of the series, we will be discussing cash flow and forecasting in more detail and explaining how it can help your business. We will take some time to demonstrate how cash flow and how to track cash flow and how to create a forecast. Some of you may already be familiar with who we are and what we do, but for those of you who are not, the SBDC is a no-cost resource for your business. We can help you find the tools you need to start your business, keep your business running smoothly, prepare for growth, and plan for the future. Our SBDC is hosted by Coconino Community College. We provide services throughout Coconino County, and we currently have 2 offices, one in Flagstaff and one in Page. The Coconino Small Business Development Center provides advising, training, online courses, and resources for businesses throughout Northern Arizona region. Our 2 conveniently located centers assist business people like you in every aspect of your business development and management. The SBDC is part of a statewide network of centers that delivers services to anyone who operates a business or is planning to start a business. We work with businesses in every industry and at every stage of growth, from startups to well-established businesses. Some of the services that we include are no-cost confidential business counseling, no-cost to low-cost seminars and training, new business checklists, access to capital loan assistance, government contracting, and much, much more. Every business is unique, so the services that we offer are catered to the needs of the business we are helping. If you're interested in our services, please feel free to reach out and we will provide contact information at the end of the presentation.
Hey, Cindy, while you're on that slide real quick, I just want to mention to everybody, we have a lot of new people to the boot camp, and the SBDC services are available statewide in every county of the state. So we do have Coconino with us today, but if you're in another part of the state, there is an SBDC that can help you out. And I know Cindy's going to share that information at the end of the slides to contact them, but it's really important for everybody to know that this is a great service available to everybody.
Okay, so today our agenda is to give you an explanation of cash flow. We're going to look at how to track cash flow in a business And forecasting will be explained, and we will look at how to create a forecast for our business. As I explained earlier, we will be demonstrating how cash flow and forecasting can help your business. However, please keep in mind that not every business is the same, and feel free to reach out to us if you'd like more information that is specifically designed for your business. After my lecture and demonstration, we will open it up for questions, where you will have the opportunity to ask questions and get clarification on any topics that I present on. We will also make sure that you leave with our contact information. And so if you think of something later on, you can always get in touch with us. And like Robert mentioned, if you are in a different county, we can also get you that information as well. So let's start with cash flow. Cash flow is the movement of money into and out of your business. You will either have positive cash flow, which is when the cash is moving into your business at a greater rate than it is moving out, or negative cash flow, which is when the cash is moving out of your business at a greater rate than it is moving in. Your business needs healthy cash flow to pay for everything from your daily operation costs to funding your growth. If you don't have cash on hand, your business can't run. Cash flow can tell you a lot about your business. For example, it could show you how your business gets its cash, how your business spends its cash, if your company generates enough cash flow to keep your business open and pay for operation costs, how to balance investments based on your cash flow cycle, and if your company has enough cash to pay off debts. Without a healthy cash flow, profit is meaningless. A business can survive without a profit, but it can't survive without a healthy cash flow. If you don't have cash flow on hand, you can't pay for your business's needs like rent, employee salaries, equipment, or utilities. If you don't have enough cash on hand to replenish the inventory or pay operating expenses, you will become unable to generate new sales. If you can't afford operating expenses, you will eventually fail. That is why cash flow is such an accurate predictor of business success. Businesses determine their cash flow with a cash flow statement. Your cash flow statement is a financial statement that shows how much cash is flowing into and out of your business, and it demonstrates the operating results and changes in your balance sheet and income statement. You should be tracking this regularly, and in this class, we will look at the cash flow analysis worksheet and how that will help you track your cash flow in more detail. Cash flow is made up of 3 basic activities. Operating activities include production, sales, delivery of your business product, and collected payments from your customers. Cash flow from operating activities shows how much cash your business has generated from its operating activities. Investing activities include purchase of assets. That would be like equipment, building, land, payments related to mergers or acquisitions, and loans made to suppliers or received from customers. Investing activities demonstrate how much money your business has spent on investments. Financing activities include cash coming from investors, so banks or shareholders. This could include the sale of stock, repurchase of company stock, repayment of debt, or payment of dividends. This shows how much of your cash flow is generated from financing activities based on the transactions your business has with its owners or debtors. There are several things that you can do to help improve your cash flow. You can work on your accounts receivable by making sure you get your invoices out quickly. You can check with your suppliers and see if you can renegotiate terms to extend those accounts payables. You can build a cash reserve. You can create cash flow worksheets to determine cash flow targets and forecasts. And we will definitely be working on the cash flow worksheets and determining cash flow targets and forecasts in this class. So let's talk a little bit about forecasting. Forecasting is a technique that uses historical data as inputs to make informed estimates that are predictive in determining the direction of future trends. Businesses utilize forecasting to determine how to allocate their budgets or plan for anticipated expenses for an upcoming period of time. This is typically based on the projected demand for the goods and services offered. There are many methods for forecasting, including qualitative and quantitative forecasting methods. Qualitative forecasting is reliant on expert opinions, and it includes market research, polls, surveys, and more. Quantitative forecasting is based on past data and expected patterns. We will be using quantitative method in class today. Creating a forecast involves analyzing the data and trends. The factual historical data is used to gather figures based on opinions and intuition. Looking at historical data can show future trends and is a powerful tool for financial planning. There are many people who benefit from using forecasting. Stock analysts use it to see how trends will affect change in the upcoming quarters. Economists use it to make assumptions regarding situations that they're analyzing. And investors use it to see how the increases or decreases will affect their shares. The most important users of forecasting are business owners and managers. They use it to help plan for the upcoming period to see how they can move forward with their financial resources. Excuse me. Forecasting cash flow accurately and maintaining liquidity are even more critical in an uncertain economy. And the better the forecast, the better your company's profitability. There is a process to forecasting, and it involves gathering current data. So you want to make sure that you have all your financials in order before you start the forecasting process. Then you will want to think about the future of the business and determine what trends and future projects might play a part in the forecasting. Next, you would look at past forecasts and compare them with actual business results. Consider what deviations took place and why. Last, you would evaluate the forecasting process and refine and modify as needed. After that, the cycle would start over again the next time you do any forecasting. Okay, so now we're going to switch over to our activity. Excuse me. So this is, first of all, I'm going to talk a little bit about our financial statements because that's very important in cash flow and forecasting. So this is a little bit of a review based on what you learned last week if you were in the class with us. But this first spreadsheet is a chart of accounts, a sample chart of accounts. It is the most important tool in your bookkeeping. If your chart of accounts is not organized correctly and transactions are not posted in the correct account, your financial statements will not generate the correct information. So notice that this chart of accounts is organized by all the needed elements. We have our assets, we have our liabilities, owner's equity, revenue, and expenses. These accounts are used to generate a balance sheet and the income statement, which provides a full picture of the business financials. This chart of accounts has ending balances from 2019. Those were used to prepare the financials that we're going to look at next. So the first financial statement that you would prepare is the income statement, which is also known as the profit and loss or P&L. And that provides a look at how your business is operating. It takes the revenues that you receive and it deducts the expenses that were incurred in order to operate the business. Remember that this statement must be completed first so that we can find the net income, which is down here. So we've got all of our revenue minus our cost of goods sold minus our expenses, and we get our net income or loss. Excuse me. So that has to be calculated because it plays into our statement of owner's equity, which is the next statement that we would look at. And notice it's right here, our net income. So the statement of owner's equity is the report that shows the owner's contributions and the compensation for the company. The ending number of this So this 94,260, that one has to be calculated before you can go onto your balance sheet. And your balance sheet would be the next one. And notice that your 94,260 is right here. So this statement is the one that takes all of your assets and your liabilities and owner's equity and makes sure that they balance. So it follows the accounting equation, assets equals liabilities plus owner's equity. So when you see that this 129,409 matches this 129,409, you know you're in balance and this is good. The next one that you would fill out is the statement of cash flows. And this is the last report of the 4 main financial statements that are completed. And this report takes elements from all of the other reports and ties them all together. It provides a way to balance to the actual bank account balance. If you notice that there's the cash equivalents here, and then the cash equivalents at the end of the month. So it's first of month, end of the month, or end of the year, sorry, end of the year. But notice here that all the activities that I talked about earlier are represented. We have our operating activities, we have our investing activities, and we have our financing activities. So those were all the things that we needed in our cash flow. So now let's take a look at our cash flow analysis worksheet that we have. This template is blank, but it's broke out by month, and it's going to track the ins and outs of our cash flow. So it starts with a beginning balance row right here where we would put our bank balance at the very beginning, and then at the end we would have our ending balance. All the stuff in between is going to show us where our money's going. It looks a lot like our statement of cash flows but the statement of cash flows is more condensed. This gives us more information and more opportunities for manipulating these numbers, or for determining if we need to manipulate these numbers. So all the activities here are represented too. Remember, we had operating expense or operating, and we have financing, and we have our investment. So all of those are represented in this analysis worksheet as well. So I did put this template in a monthly basis, but think about this, how easy it would be to track your cash flow on a daily basis. Or if that's too much for your business, you could think about maybe doing it quarterly or yearly instead. It depends on the activity in your business and what your business needs, but you would just make those determinations when you're doing your cash flow analysis. So now let's take a look at one that's all filled out. So we have our cash flow analysis for 2019 here. So every month is filled out to give us our ending balances for our 2019. We started with our cash beginning balance. This was from January 1st. This is what was in our bank account. And at the end of January, we had this in our bank account, which will equate to the 1st of February. And that automatically goes up there. So you can see here that it's showing you a lot of good information. It's showing you that you had, in January, you had your beginning balance of 46,000 and some change. And then you had a total income from sales of 44,000. So you would add that too, right? You received that income. So you would add that to your balance. And then you purchased some inventory. So you would subtract that from that balance. You paid some bills, paid for some expenses. So now you've got that to subtract. If any new financing was received, then you would put that here. Or if you made any payments on any existing loans, you would put that here. And that is added or subtracted as needed. And then of course, contributions and draws would be here. And then at the end, you should have that ending balance. Now I do have a change in cash here, and we'll talk about that a little bit more here in a little bit, but I just wanted to point it out. You can see that in our expenses, we have quite a few expenses. You can see our advertising changed here and there based on whatever advertising campaign we were working on at the time. And we have a lot of, excuse me, a lot of those types of things that change or variable assets or variable expenses, I mean. And then we also have fixed ones. So if you notice here, I have rent, and rent is fixed all the way across. That's pretty typical. Your rent generally doesn't change too much unless you have like a rental agreement where you change every year or something like that. Our bank charges didn't change, our dues and subscriptions didn't change, and our insurance didn't change. The rest is variable on what's happening in the business at the time. So let's take a look at this in another format. So we're going to look at this. This is a quarterly comparison between 2018, 2019, and 2020, and it's only looking at the fourth quarter. So in this case, we have a business that is in retail sales, and their biggest selling point is in the holiday sales. And so we're going to take a look at that and see how it's changed over time. And you can see that our total income from sales in 2018 for our fourth quarter only is $170,000. And we were doing pretty good, right? We had 115 in operating expenses. We had inventory purchased, changes in our financing, all of that. Then in 2019, I'm sorry, we went up. So our sales went up, and as predicted, our inventory went up a little bit. You got to have the inventory to sell, right? And then our operating expenses also went up. Then in 2020, you can see that we had another change. We had, we went way down, right? But everybody knows 2020 was pandemic, and it was rough for a lot of people. So yeah, we had a severe decline in our change in cash flow, in our change in income for 2020, as well as our expenses. Look at that, they're up pretty good. I mean, they're pretty close to our 2018 numbers, even though we had a severe decline in our sales. And most of that's coming from the fact that we had our rent that didn't change. We had all those fixed costs that did not change. So we still had to pay those. Okay, so let's look at this in another way. Let's look at it in percentage of sales. So here we have our cash flow analysis. And I've added a column here after each month so that you can see what the percentage is of that item for sales. So for example, we had, excuse me, we had a total inventory purchase of almost 35% of our sales. We had payroll that was almost 50% of our sales. So we had quite a bit of costs that were associated with our sales. And if you were looking at this and thinking, okay, how can I make things better? You can identify those areas that are bigger. Look at our rent. Our rent is almost 20%. That's pretty crazy. So, you know, you've got quite a bit going on there, and, you know, you need to be very conscious of that and how it's working and how things are going. That will help you identify those areas of weakness and where you can actually save money, you know, decrease those costs and move forward. Now, payroll, you may not be able to do too much about, because as your sales go up, so do your payroll costs, right? Because you need somebody there to sell your items. But you might have some areas that you could actually work on that. Your inventory, you may go to your suppliers and say, hey, I've been with you for a long time, and I need to talk to you about what's going on with our prices, and maybe you're with them exclusively, so they give you a discount for that, or something to where you can get those inventory costs down a little bit. You can adjust, like I said in the presentation, you can adjust your accounts receivable so you can make sure that you get that out to people faster and they get it back to you faster. You can adjust your accounts payable, see if you can pay it a little later so you can get a little more time to generate that money before you have to pay it off. But this gives you a good idea of how things are going in your business and how it's looking overall. So it also gives you a good idea of how to plan for the future. You can see that, okay, I've got to probably think about my my payroll costs being about 40% of my business. And that's what I'm going to be counting on when I look at other things or when I plan for the future. Okay, so now that we have all that information analyzed, let's go ahead and dig into forecasting a little bit. So we want to project how we think we might do next year. First, we want to think about all the information that has been gathered and what the trends seem to be. And then we want to decide what range our forecasting should reflect. It is best practice to prepare 3 forecasts, 1 low, 1 mid, and 1 high. That gives you a more accurate picture of what may happen. So in this case, I started with my high and ended with my low predictions. You can see that I'm using my this information here, and I've translated it here to actually increase across the board 25%. So everything increased. My income from sales increased, my inventory increased, and my operating expenses increased. So across the board, everything increased. I did it again for 10%. And you can see the differences here. We started out with our income from sales. Okay, let's look at what we started with. So here's what we started with, 722, 410 for our income from sales. And then it went up to 903 if we had a 25% increase. If we had a 10% increase, we had 794, 651. And then my last forecast was in pandemic fashion, was a 25% reduction in expenses and income across the board. So yeah, then in that case, I went down to 541 on my income from sales. And notice that my operating expenses also went down across the board. And I did make an adjustment here so you can see that my fixed costs stayed the same. So that's the only thing that I made an adjustment for. Otherwise, it was 25%, 10%, or negative 25% across the board. So that's helpful in some cases if we thought that nothing would change. And in all actuality, I have 4 forecasts if you consider the one with no change a potential forecast. That's not very likely. Most companies are changing, and most companies want to change for the best, right? So we want to go up. So let's do one more forecast together. And in this forecast, we're going to use a little bit more of a strategic implementation of our forecast. So if you're planning on working really hard on your business to create more positive cash flow, and you have a project coming up and you think that it's gonna help sales increase about 25%. Awesome. So at the same time, we have another project that's going to decrease our operating expenses by 10%. So let's take a look at what that would look like. That would be great, right? Everybody wants that. So I'm going to start a new sheet here. And I'm just going to copy this over real quick. Okay. So now we have this. This is our forecast for 25%. I kept this one so I don't have to change any of this up here. But I am going to have to change the operating expenses because we talked about this is going to decrease. We're very aggressive this time, and we're going to decrease this by 10%. So I'm going to just change my formula really quick to decrease that by 10%. I'm just going to get this over here, copy my formula over and down. So look at what we did. Now we have that 900,000 income from sales, but our expenses are lower, right? So our expenses went down and they look great. However, I made one mistake in this, that I haven't gone in yet and put my fixed expenses in. So I would want to go ahead and adjust all of my fixed expenses so that they stay fixed, and so that they don't reflect a decrease unless I wanted them to. Let's say that maybe one of those things in that project to decrease was that I was going to my landlord and I was saying, okay, I need to have my rent reduced by this amount, and I renegotiate my rent and they're on board with it. And so they go ahead and reduce the rent. Then we could change those numbers. But if they're not going to change, we know they're going to stay the same, then we should make sure that our forecast reflects that. So I would change my insurance as well, and my dues and subscriptions and my bank fees. Now it's possible that these will change, a little bit here and there, but in my example, these are all fixed costs. So now we've got it at $459 for our expenses. Our income went up that 25%, but I also allowed the inventory to go up by 25%, because unless we are part of our project is to reduce that inventory cost, we would still have to buy 25% more inventory to get 25% more sales, right? So I left that there. Okay. So now you can see the difference in this one from the other ones where we had an across the board. So we went down here and up here. And if you look at the 25% one, we were up here, but our down didn't go down. So it went up. It went to 598, 566. So almost 600,000. So by doing this project that we were doing, we've saved about $100,000, right? A little more than $100,000 in expenses, and that's going to go to our cash flow, which is really nice. We can use that for maybe doing buying some equipment that we need or whatever. And we know that money is going to be there because we've done our forecast and we know what's happening. All right. Now we're going to go back over here. So here are a few tips for you to consider. First, keep an eye on your cash flow. Hopefully you have an idea of how important your cash flow is to your business and what you can do to improve it. Analyze your financial statements regularly. It is extremely important to keep a close eye on the health of your business, and the best way to do that is to keep an eye on those financial statements. Just like your bank account, you don't want to leave your business financials unattended. Look for ways to stop wasting money and increase revenue. Just like in the demonstration, if we increase revenue and decrease expenses even a little bit, it will make a tremendous difference in your cash flow. Pay attention to industry trends and customer behavior to enhance future forecasts and decision making. Okay, so now we are at the question and answer Q&A portion of our presentation. And thank you so much for joining us for this information on cash flow and forecasting. If you would like to discuss your cash flow in more detail, you can contact us or any of the other SBDCs, depending on what county you are in. And now we'll open it up for questions.
Hey, Cindy, before we turn it over to questions, I'd like to turn it over to Rich just for a few minutes, who had something he'd like to add.
Sure.
I'm Rich Chanik from Northland Pioneer College up in Sholo, and we use the same sort of thing that Cindy uses with cash flow analysis. But if there are some of you out there that are not in business yet, that are thinking about starting a business, this concept is equally valid to put your cash flow together. The only thing that we add is we add a page before we get to the starting balance that is startup expenses. And what we do is we ask our clients to just put it on the bar at home and write down every single thing that you're going to spend money on before you open the company. I mean, if it's a wastebasket, if it's a pencil sharpener, all of those sorts of things, so that if you start off with $50,000 and your startup expenses are going to be $22,000, then your starting balance for that cash flow analysis, we carry forward from all of the startup expenses. So, the examples we used today are for a company that's in operation, but everything that Cindy said can certainly apply to somebody that's pre-venture if we throw in those expenses ahead of time. So please make use of that also. Thanks, Gina. Appreciate the time.
So I'd also just like to add, not only can you use these for pre-venture, but say you have, an existing business already and you're projecting your cash flow or those kinds of things, but maybe you want to expand into a separate sector. So say you're a company that currently does, we had a couple service-based businesses on the call that you do wedding planning. But maybe, you wanted to go into event planning or interior design and have that as a segment of your business. You could project some of those things and see if maybe adding a separate sector or expansion would make sense for your current business model.
So I see that we had someone raise their hand. If you have questions, please post them in the Q&A, and so our team can answer those. One is, where can we download the Excel templates? The templates will be available on the Bootcamp website for this session later today, hopefully. We have them. We will post them up with the recording of this session. The slide deck and the workbook will be on there as well. What other questions you guys have? Please post them up in the Q&A. We've got Cindy, Katie, Gina, and Rich all to help answer those. We have, is there a similar session on creating the cash flow statement?
So I don't know if the ACA has something on creating the cash flow statement, but if you do have issues or questions or need assistance with this, I would suggest that you reach out to your local SBDC who has counselors available statewide to help you, in preparation of this and the feasibility and looking at the feasibility of your venture. Kelly asked, would you consider the Excel you showed to be a P&L, or is that something different? Kelly, great question. And yes, essentially what the cash flow statement is a P&L, right? But it's taking your cash in, looking at the activities in and out of your business, and then forecasting cash. So in essence, yes. And then Kelly asked, are these terms interchangeable? So I'm guessing about the P&L and the cash flow sheet and a statement of cash flow. So no, they're not interchangeable, because they really are looking at two things. A profit and loss, in essence, in true accounting, is looking at the profitability of the business, where the statement of cash flows is more a tool to project cash flows. Yes, they lean on each other and interlock, but their purposes are different.
And Kelly, if you didn't get a chance to watch or attend the session from last Thursday, the team did a great job on sharing information about P&Ls and financial statements. So that session is available on the website to review.
And then Michelle asked, how would you suggest using QuickBooks to create this reports as opposed to Excel? That is a great question, Michelle. And I'm forgetting the name of it right now. Cindy, what is the advanced thing of Excel that will project some of these things for you? It's not coming to my head. But there is a feature in Excel. It's an advanced version that you need to buy. Hopefully Cindy can help me with the name that will do some of these cash flow projections for you. And there are software and templates that you can do or purchase to do cash flow projections. I'm really old school and I like having control and being able to manipulate those numbers and see what I can do. So I prefer the Excel, but there are programs and templates that you can Google online that would help you with this.
Also, if Michelle's using QuickBooks, if you are using QuickBooks and you're keying in all of your information faithfully and consistently, then you can leverage the reports that QuickBooks has to get all this information, you know, to help with the projections.
So Yuri asked, thank you. This was very helpful. Is there a similar session on QuickBooks as a software to manage our finances? So there are courses on QuickBooks that are taught all throughout the state nationwide. You can even find them online. I don't know if the ACA is going to be doing those, and they're often taught by QuickBooks Pro advisors. The Coconino SBDC will be launching those shortly or within the next month or two. But yes, there are resources you can find online for that, Yuri. And then Michelle posted just how to run a report, a statement of cash flows from QuickBooks Online for any of you that may need to know how to do that.
I'm going to post that information that she shared in the Q&A in the chat so everybody can see it. Thank you, Michelle. All right, what other questions do you guys have? These are great questions. We still have a few more minutes. We can take questions, so please bring them up. We've got a lot of people on the phone with small businesses, so again, please share your questions.
So we have a question from Yuri. If you know of a QuickBooks training that I can attend as a small business owner in the state of Arizona, Maricopa County, can you please share? Yuri, I'm not from Maricopa, so I don't know what's available there.
We'll be looking at doing a QuickBooks training option for a future boot camp session, probably in July or August. But in the meantime, you may also look on QuickBooks websites. I know the major software companies all have tremendous training materials on their own websites to help their users take advantage of the products. Rhonda asked, does the payroll line include owner draw? Shouldn't that have gone down with sales?
So Rhonda, you know, many business owners that I know don't have their draws go down with sales. Now, many of you who are on the call know that this last year with COVID, that necessarily wasn't true. And there's times that your owner draw would have to go down based on, you know, the fluctuations in your business. But most of the business owners I know like to keep that standard. So it's kind of one of those things that it depends on what's happening with your organization.
So for Katie and Gina, Rich and Cindy, I have a question. What are some of the things you've seen that are the challenges to small businesses out there in preparing or having a consistent cash flow statement or P&L or having their financial statements. What are some of the challenges you see, and what can small businesses do to make sure that they avoid those challenges or those pitfalls?
Robert, we're kind of in a different situation, and we're a little bit similar to Gina, but we're very seasonal up here in Show Low, and so it is. Nobody wants to work on their business when they're behind the cash register 12 hours a day, and that's where they are right now. And so the seasonal nature of the cash flow up here is really something that we have to work on. If you're just making projections and you're assuming every single month your sales are going to be the same, well, that may be true in Central Arizona, but it's not true here. And January is going to be very, very different than July. And so I would recommend that you customize these cash flow statements as much as possible to include seasonality.
Absolutely. And I think that goes back to, every business is a little different, and they're going to need to adjust based on their business. So this information that was given today is more of an overview for an example business that probably doesn't equate too much to your business. It shows you kind of the concept, but that's about it. And one other thing I wanted to mention, going back to Robert's question, is that a lot of the times the issues that we see is like Rich said, they don't have time to get to it. So if you really work hard on your chart of accounts and get that updated and in order and really nicely put together to where it's really easy to see where those things should be recorded, and you keep it nice like that, it's going to help you a lot, because then when you go in, everything's in there, you can pull those reports, and it will help you out a lot.
Excellent. Thank you. We have a question in here. It says, if you receive support from the Pandemic Assistance Program, do you categorize it in sales or another category to properly categorize it on the spreadsheet?
I'll take that one, Bob. So without knowing your specific situation and exactly what type of assistance this was, if you have to pay it back, or if it was a grant, I would maybe make a line in the equities section just for cash flow purposes to recognize the receipt of those funds.
Thank you. And then we have just a comment from Garth. It says, I want to thank you for presenting this information. For those of us that are so small, we certainly don't need QuickBooks. If we know Excel well. Oop, it went away.
I did that, sorry.
That's all right. We have another question from Matthew. It says, my QuickBooks imported my PayPal, imported my sales. Then when I transfer the money to my business account from PayPal, QuickBooks marked it as an expense on the ledger and then marked it as another sale for my business account, causing a big mess. Whom do you recommend to help fix this double sales error?
So Matthew, if you're using a bookkeeper, then I would have your bookkeeper fix this error for you. If not, just talk to your CPA or whoever helps you with your books to help change that entry.
Kelly asks, for super small businesses, 5 people or less, what is the advantage of using QuickBooks over bank statements? Excel can be used at any time with bank statements.
Kelly, I may be different than the other people on this call, but I'm not a big believer that every business should be using QuickBooks. If you're not proficient with it, if you don't understand how it works, I think that just as much can be done, especially for a small business, with Excel. So I would say that you really need to utilize what you're comfortable with, that speaks to you in the language that you can understand, because at the end of the day, this is your information and your financial future. So for you to have a method that makes sense to you and works for you is the most important thing.
Excellent. Thank you. All right, we've got a couple more. We got one from Kevin. When I first started my photography business, I was able to download a chart of accounts from the Professional Photographers of America, which allowed me to then import that chart of accounts into QuickBooks and get up and running fast, and then spend time to set up all the chart of account entries to match them with expenses and income in QuickBooks to automate from my bank downloads. Everything flowed automatically. You keep up with it, then it's actually quite simple to get your statements, check your P&L to see what's happening on a minute by minute basis. Yeah, from what I've seen, like with QuickBooks and any software that helps, any accounting software, is you have to spend the time on the front side to get it set up right, and then it can work for you. But if you don't set up right on the front side, it can probably be more of a headache for you down the road. We have someone mentioned they prefer using Quicken as an option. That there's definitely an option there. All right. We had some great comments. I appreciate everybody sharing their comments and on here. We're getting close to that time to wrap up, so we'll give you guys a few minutes back to your day, but we want to thank Cindy and Gina for the presentation, and thank Katie and Rich for being on here as well. We appreciate all their time and their effort to put this session together and this series together. Again, this is an example of the statewide support. We have Katie from the central part of the state, and Gina from the northern part of the state, Cindy from the far north, and Rich from the east. So we've got everyone throughout the state helping to support these programs. So thank you very much. We hope everybody can make it to our Tuesday session, 9 a.m. We look forward to seeing you there. But until then, everybody have a good rest of the week and a good weekend, and we will see you on Tuesday morning. Thank you.
Thanks, guys.